What is going on? Welcome back to Trading Stocks. Today I want to talk to you about SoFi. So we've got another interesting day on our hands. I want to go over what is affecting it today, what the data points are saying, and everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So currently at the time doing this video, there's roughly around 9 minutes left in the trading day. It is down 2.54%, 31.3 million shares being traded, 42.1 is the average. No actual news from SoFi itself, no SEC filings. You did have some jobs data that did come out, as well as employment. So ADP non-farm employment, initial jobless claims, kind of mixed data. But then again, I think the market is really taking this as somewhat as a negative, because Powell recently did kind of have and show some signs of concern over the labor market. So this is spooking a lot of people. And as a byproduct, this is increasing slightly. Not much change from yesterday though, I guess, but 41% of the likelihood of a 50 basis point cut, 59 for a 25. So yeah, honestly, the market is just trying to digest a hell of a lot of things, as what I even mentioned in the video yesterday. But as of right now, you do see a lot of people, I don't know why, it's just the go-to thing. And this is why I do bring up shorts on a daily basis, because you see a lot of people saying that it's shorts, blah, blah, blah. Shorts aren't actually doing all that much today. So they are returning currently 186,000 shares. Of course, that could change in the last 10 minutes of the trading day, but for the most part, that's pretty much what it is. 17.74% of the free float is being shorted, works out to be 185.74 million shares overall are being shorted. I'm pretty sure I'm going to kind of jinx it by saying it, but I haven't seen cost to borrow minimum negative for roughly like a week and a half, give or take. So I don't know if there's some correlation with that and everything else, but today it is truly institutions selling, similar to my video yesterday. For whatever reason, institutions want to sell SoFi. So these are all the transactions occurring on the secondary market above $100,000. So you did see actually a fair amount of buying first thing. You can kind of always pause the video and just go line by line, but at 8:30 there was a hell of a lot of buying, and no doubtably, as a byproduct, this is why you saw it have a high of roughly $7.64. So a lot of good buying. And then all of a sudden, just something changed, and then you had a couple of sells. And so 209,104, 295, and that is over and above a lot of the transactions occurring on the dark pool. So these were very, very popular of an exchange today. So these are all the transactions. You did have a lot around that $10 range, which coincidentally, that's where it started to really break down. So you did have 2.66, 2.66, and again, many more transactions. So for whatever reason, institutions wanted to sell. And so I'm going to play this near the tail end of the video, because this is just another analyst viewpoint on the jobs data. And I think that is just really affecting SoFi. So it's one of those weird scenarios. Again, I guess if you want to think of it glass half full kind of scenarios. On a positive note, shorts are returning. Maybe that's a good thing again. But looking at options, a lot of money is looking at options. So 4.5 million in calls, 1.33 million in puts. So for instance, I always like to pay attention to clearly the big candles right here and what that does truly mean. Because yeah, it's one thing like regular retail and what they're trying to do, because just between 11:30 and 11:35, there's $16,000 in options being done. So no doubtably that's probably retail and some sprinkle of institutions, but this within this candle 1.4 million, that's clearly big money, right? So if we kind of open this up and see exactly what this is all about, you can kind of see that there is $10 calls and $7.50 calls. Obviously it's a mixed strategy, so multi-layer, but generally, the fact that they're seeing 750 and 10, that's somewhat good if you ask me. As a consensus though, 36% of all the options being done today are optimistic and bullish. So once again, options is just merely a sentiment. It does not move the stock price one bit. So just kind of be aware of that. And with shorts kind of increasing at various stages, they typically do hedge with call options. So again, you have to take all that with a grain of salt. But as of right here, though, these are all the call options that are being purchased. So the closest strike price at the time is, so it's just a lot of hedging and not a lot of optimism. So you do oddly see at that $10 strike price, there was 11,000 that was purchased. So January 16, 2026. So that chain that I did bring up. So there's a good amount of optimism, I guess, that one entity, I don't know who exactly they are, but we will never know. But this is the current open interest. So we already do know, especially with tomorrow being Friday, if it's anywhere close to that 750 or even 7, you'll see a little bit more activity. But currently set 5,000 at that $7 strike price, 11,000 at 750, 45,000 at the 8, and 40,000 at the 850. Already starting to see these walls at 8 for both the next couple of weeks. So 17,000 at the 8 and then 35,000 for these chains. So yeah, it's an interesting scenario. Hopefully the data does come out tomorrow. So we do have payroll coming out tomorrow. So hopefully that is good and enough to calm the broader market and stop this crazy sell-off, because as of right now, it is sitting at $7.25. So once shorts, this information does update, maybe this right here is shorts, but whoever it is, there is a hell of a lot of volume. So once again, big money has always, they just don't like SoFi, plain as day. So as of right now, with it at $7.25, it is trading between this S3 and this S2. So $7 will be the next strong support. $7.34, which I did say in my pre-market video, that needed to hold. Well, it didn't. So definitely watch for that to be that next resistance slash target going into the next several trading days. So SoFi, I think right now is just breaking down on a technical level. Quickly popping over to IBKR, it does have a pivot point of $7.28. So for as long as it is below that, then it is anticipated to get between that 660 and 620 range. As of right now, though, if it was to have stayed above that, then it was anticipating, or at least projecting, $9, which is kind of crazy. But given what's been happening over the last little bit with SoFi, a lot of volatility. So it obviously was forecasting that in either direction. So kind of crazy stuff. And even right here, while I'm on here, no new analyst ratings. Last one was done 28 days ago, $7 price target, KBW, Tim, who has a 78% success rating. So analysts clearly still do see more upside, because $8.27 is the consensus, and that represents a 14% upside. So let me know your thoughts on that. Before I go over the technicals, I'll quickly play a minute from this, and it kind of goes over a lot of the recent data and how the market is kind of really thinking about it.
Recruiters are definitely feeling the pain. In fact, recruiter sentiment just hit its lowest level in 18 months in August. Does that spell trouble for tomorrow's jobs report, which of course is the last one before the Fed's next meeting? Back with us once again is Evan Sohn, chairman of Recruiter.com. And Evan, this is taking a notably more, do we say downbeat yet, tone the past couple of months?
Yeah, and great to see you, Kelly. And yes, we're certainly feeling the pain. Recruiter sentiment is at a 2.6 out of 5. It's the lowest level, as you said, in 18 months. The workload, the number of jobs that recruiters are working on, are also down. It's been down for a few months now. And it's a really tight labor market. You saw in the Joel report that you just saw, hiring is down 5% year over year, but quit rate is down 10%. So if candidates aren't quitting, that actually causes even more pain. Certainly if companies don't have the compensation levels that they want to offer these candidates to come quit their job. And 92% of the recruiters reported that 92% of the candidates that they're talking to are actually employed. So we have lots of people employed, fewer people want to quit. That causes a lot of pain in filling these overall jobs.
And one of the things we're looking for is vigorous hiring that could absorb both the new entrants to the labor market that we've seen and anyone who might be facing a layoff. Where should we be looking for industries that are actively hiring and expanding right now?
Well, as you saw in the Joel report, and we have our own, the Aura jobs report was down 8% in terms of overall job postings. So it's certainly taking a real hit. We saw on the in the recruiter index, healthcare services are still there in terms of overall jobs themselves. Ironically, government jobs are still in the top 4 industries, but they're actually down 2% since July. Ironically, there's a lot of AI jobs now. So AI jobs in the tech industry represent, according to the Aura jobs report, a little over 6% of all tech jobs now related to AI. So I think you have AI skills. That's certainly a good place to go. The other thing.
So I think that alone, that one statement also kind of matches with how AI isn't a bubble, right? Because yeah. But anyways, beside the point, that's kind of a quick summary of some of the recent job reports, how the market's really interpreting all of that. But as of right now, it is still selling off, so higher percentile of the Bollinger Band. Most likely tomorrow will retest, kind of transitioning into the lower. Very bearish sentiment right now based on this, a red line above the white as well. It is at 54, so kind of neutral, so not really overbought nor oversold. A number of retail investors have been just dropping the mic and kind of taking a step back, because I've stated this in the past, SoFi is very volatile. So if you guys haven't learned options already, please just take the time to research it, because it can be very beneficial on any volatile stocks such as SoFi. But beside the point, by all this volatility, like in the last 1 year, maybe even a little bit longer, it's very predictable. And so for instance, every time we know SoFi goes or has an upcoming earnings, we already know there's a rally that leads up to that. Then we know typically there's a sell-off, time and time again, very repetitive. And so that does really kill the sentiment, really deters a lot of long investors. So kind of adds into that downward selling cycle, if that makes sense. So every time it runs up and it looks optimistic, as though like a very good breakout to double digits is going to happen, you have a lot of selling, because people know it is just going to sell off time and time again. So I think SoFi and its sentiment is truly broken right now, and I don't really know what is going to solve it. So yeah, let me know your thoughts on SoFi. Have you guys been buying? Have you guys been selling? Like I mentioned, options wise, have you been dabbling with that? Have you been trying it out? I myself, like I said, I did sell $8 calls for this week, but probably $7.50 would have been the best bang for your buck. But again, it all comes down to risk tolerance, and I think at the time when I sold it, like it was like $7.80. So I don't think anyone was forecasting for it to pull back to as where it did. But if you did, round of applause. But let me know your thoughts. Don't forget to hit that thumbs up. And with all that, appreciate all of you watching.